Most Americans want financial freedom, but the big question is, should you chase quick profit with day trading or build wealth slowly with long term investing? Today, I'll break down both strategies, their pros and cons, and help you decide which one works better for you in 2025. Day trading means buying and selling stocks within the same day. Traders look for small price movements and try to profit quickly. The potential, you can make money fast. The risks, it's stressful and most beginners actually lose money. In fact, studies show that over 70% of day traders in the US lose money in the long run. Now let's talk about long-term investing. This means buying quality assets like index fund, ETFs, or blue chip stocks and holding them for years. You write out market ups and downs. You benefit from compound growth. For example, if you invest $10,000 in the S&P 500 20 years ago, today you'd have over $65,000. That's the key difference. Day trading equal quick profits, high risks, full-time focus. Long-term investing equal slow growth, safer, passive wealth building. Day trading is like a sprint. Long-term investing is like a marathon. So, which works better in 2025? AI, tech, and healthcare stocks are booming, but the markets are volatile. For most Americans, especially beginners, long-term investing in ETFs and index fund is the safest path. Day trading might sound exciting, but remember, very few people actually win at it. So, what works better if you want financial freedom without burning out? Long term investing beats day trading. But if you're curious, you can always try both with small amount of money. Tell me in the comments, are you more of a trade or an investor?